Welcome to Crypto Corner, everyone. In today's episode, we're breaking down TVL in simple terms. This is one of the questions I get quite often, so let's explain. Alright, let's get started. Well, aside from market cap, trading volume, total and circulating supply, total value locked TVL is a crypto metric that is popular with DeFi investors. It's used to assess the total value of assets, usually calculated in dollars, that are stored in all DeFi protocols, or it can be estimated for a single DeFi project. For example, DeFi protocols offer staking rewards, interest from lending or providing liquidity, yield farming, minting of new coins and tokens, fixed income rewards, and so on. Because blockchain services are developed on peer-to-peer networks, there is no central authority to govern, build, or improve the ecosystem. Therefore, cryptocurrency investors themselves receive such incentives for building and supporting these networks from the bottom up. TVL in staking, for example, could be a very helpful indicator for investors looking for DeFi platforms with the very best rewards. So we often compare popularity of various blockchain networks by their TVL, the total value locked. The higher the amount, the more popular they are. This gives them advantage as it makes them more trustworthy, although the most recent collapse of UST, the algorithmic stablecoin by Terra, which was paying stakers around 20% annual yield, is surely a bitter lesson that having a huge TVL doesn't guarantee stability of the network itself. Importantly, TVL doesn't reflect the yield that these deposits are expected to earn. It only reflects the current value of the deposits themselves. A project's TVL doesn't change only when users make new deposits or withdrawals. It is actually constantly changing in line with the fluctuation dollar value of all of those assets that are involved. Every DeFi protocol deposits can be denominated in its native token. So when its native token appreciates in value, the protocol's TVL grows with it. When a DeFi platform's TVL increases, so does an increase in liquidity, popularity, and ease of use. These factors contribute to the success of the project. A higher TVL means more capital is tied up in DeFi protocols and participants enjoy greater benefits and profits. A lower TVL implies less money availability, which leads to lower returns. The market share of the DeFi protocols can be easily monitored on DeFi Pulse and DeFi Llama, the two most popular data aggregators for DeFi. The combined total value locked of all DeFi protocols grew exceptionally fast between 2020 and 2021. At the start of 2020, the combined total value locked across all DeFi platforms was around 630 million. By the beginning of 2022, it had already reached over $172 billion. Now, as the market went into a correction since the end of last year, this amount has shrunk as well, but at its peak last year, we printed upwards of $250 billion total value locked. Over half of this was accounted for by one protocol, MakerDAO. It still remains the most well-known protocol alongside Curve and Aave. By the end of 2021, these had more than $10 billion in total value locked each. For a full list of all crypto platforms and blockchains involved in DeFi today, grab the link to my free ebook called the DeFi List. I just updated it. This is the second edition. Also check out the other links that I dropped in the description below. There's other goodies in there too. It's interesting to note that DeFi Pulse and DeFi Llama use different methods of calculating total value locked, but if you would like to calculate it yourself, you can take a look at this article on nasdaq.com. It's explained there. Protocols can operate on just one network or spread themselves across many networks, in which case they have an independent total value locked on each of the networks. The largest network by DeFi total value locked is Ethereum, accounting for almost half of the total volume worldwide. With the increasing quality and value of DeFi in the crypto space, total value locked has become a metric for investors who wish to assess if a protocol is healthy and sustainable, but there are underlying conditions that will have an effect on the worth of DeFi projects, not just the total value locked. Market volatility is one of the main variants that can greatly affect the value of locked assets, starting with the price of Ether, since Ethereum is where most of the assets are located. So the significant increase in the price of Ether since 2020 has inevitably impacted DeFi's total value locked, but this means that the total value locked can increase even without adding new users or more capital to DeFi. Just a value increase in the underlying network is enough to shift the scale. Also, because of the character of DeFi services, tokens could be effortlessly moved and counted more than once, leading to a misjudgment of the protocol's liquidity capacity. As with all indicators, the total value locked is also an estimate of marketplace situations and should not be the main metric to dictate an investor's approach because of its blunders and approximation. But anyhow, I would use total value locked to measure the integrity of DeFi platforms occasionally. Of course, we all want to earn high yields by depositing our tokens in DeFi protocols, but such offers from obscure or little-known platforms could very well be scams. Therefore, it's best to only use platforms with a total value locked greater than at least $1 billion and audited by blockchain cybersecurity firms like CertiK. It's always more trustworthy if auditors have performed professional checks, and the better their balance sheets, the more we can trust these protocols. Overall, total value locked is one of the popular metrics that we use, which is why I decided to dedicate a whole episode of this video podcast to it. With that said, I hope you found value in this episode of Crypto Corner, and if you did, share it with someone else who might benefit from watching this. One of our sponsors is Token Metrics. I chose them to be one of our partners specifically because I use this website a lot in my market analysis and research. If you want to know when it's the right time to enter a position on any coin or token, or more importantly, when to exit, because this is really the difficult part, there are loads of metrics there to help you with that. This is one of the new tools that helps me analyze the market better and spot the right entry or exit points. As you can see, it gives you a green signal when the market turns bullish, meaning we are in an uptrend, and the red signals indicate when the market has turned bearish, thus exiting positions and preventing losses becomes really easy with this tool. There are so many tools that you can use. Here's another one, the out season Bitcoin season indicator. This gives me a very good idea if it's time to diversify into outs, or should my focus be on Bitcoin instead. There's no need to be a back holder during a bear market. I think by now that much is clear, and with this tool it's a no-brainer. They provide in-depth data and stats on all cryptocurrencies and a lot of new upcoming projects, launches and token sales too. This is where I find unknown gems before they hit the mainstream. And I particularly like their emails with detailed breakdown on technicals and fundamentals on the projects that they research, and their expertise in this field is second to none. You can also customize your portfolio and track your P&L day to day, and you can create separate portfolios for different exchanges that you will use to monitor your progress in the most efficient way. There are so many categories to choose from when analyzing the markets, way more than I've seen on any data aggregator website, so you can really advance your analysis and improve your investment strategies. I've been a premium member of Token Metrics for the past 2 years, and I'm using it on a daily basis. They send us emails, host webinars and podcasts with technical analysis, and they go deeper into their research on new projects or current market conditions. I find this really helpful in my own market analysis, as they give me a hint to things that I might have missed or overlooked. They offer a trial period, and you get a 10% discount and a free ebook with my link, so go check it out. It's in the description below.
Token Metrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams.
Alright, well, this wraps up today's episode, everyone. Like and share it, and also subscribe if you're new to this channel. Make sure you check out the links in the description below, and while you're here, pick another one of my videos.